Hey traders, Parker here again with the average range from high to open, low to open indicator. But right now I have on the screen some levels for the SPY. If you look right here, this is our 2025 open here, and here's 10% correction if the SPY does come down here. This is 10% correction. The other indicators I have on the screen is the 200 day, the 50 days, the yellow line, and the 21 days, the blue line. And you can see how price has respected these levels. These levels I pulled from the weekly chart, and you can see I have a Fibonacci extension tool on here as well. From I want to say this is from 23, 2020, yeah, 2020, yeah. So just an idea where price could actually go. So let me get the indicator on here and switch it back to our daily chart. And you can see how the S&P 500 respect to these levels. Right now, I have this indicator set for, I want to say 3 month, yeah, 3 month average move from the open for the S&P 500. And you can see last week it actually came down into these levels right here. You can see the R range average. That's the range average move from the open, from low to open, from open to low actually, and then you have your average range high right here. So this is the point of view from the daily, and you can see right now here's our lowest low. It actually did make a lower low for these 3 months down here at the 555 level. This is a premium version of the indicator. If you get the free version, you won't have these clouds. These clouds represent the Fibonacci levels. um, so you got your midpoint, your simple move average as well. So the 3 month move average for the S&P 500. We take it down to the 15 minute. We can actually look and see what we did on today. On the day on the intraday chart, I use a 10-day average and I use a daily period, and we can see how the S&P 500 really respect these levels. Again, these clouds represents the Fibonacci levels. So I have the 214 as my Fibonacci level, then the 78.6, the 38.2, and then the 61.8 is just top the green. And here's your midpoint for the actual range. And this midpoint here represents your 10-day average high and low midpoint. And here's our range right here. You can see how when the market opened up, it came down to its previous day low, which is 565.63, and it really just sold off. It kind of hung around this area, tried to reclaim this low or reclaim the midpoint, came down to its average 10-day move, went down below to one standard deviation of the average move, and pushed back above. One of the things I wanted to show you is looking at the previous day and how this indicator actually really helped me out anyway, taking a trade, because SPY bounced at one of the levels I was looking at. And you can see right here, SPY bounced right here at this 575 or five, is it 575, 567. Right here, one of the levels I had marked out, and it actually stopped right back up here at this 575, which worked out with resistance because it seemed like it was trading us in the range right here. If I zoom in, you can see how it really respected those average moves right here. At least coming down to this Fibonacci level right here and then reversing, coming back above its previous day low and pushing back above from there into this range, average range high right here. And it kind of just range traded from there. So that's what it looks like on the S&P 500. I'm going to switch it back to the daily time period. I'm going to go over some of the sectors. So we're switching it back, and I'm gonna switch this back. Let's look at it from a weekly perspective, actually. So on a weekly, I use the 12 period. On a monthly, oops, and this is what it looks like on the daily. But let's go to the max, and let's go to show only this period. We're not necessarily interested in the last periods right now, at least. And this is what it looks like from a 12-month average. 12 months average from open to low and open to high. and you see the difference right here. So we zoom in, and we're looking at this week right now. No, this is this week right here. This is last week. And you can see how it came down to one standard deviation. Now we're trading in below one standard deviation and possibly coming back down to this point of actually having a correction for this year, or at least down 10%. So we're going to go to XLK, look at it on the same standpoint. And you can see right here, XLK today, this week, went down to one standard deviation as well. But last week it bounced from this 211 level that I had marked out. I think that 211 marked out from a previous all-time high. So I believe right here I would expected it to bounce or do have some type of reaction at this level, and it did have a reaction. It didn't make it down completely to that level, but it did bounce from that area. So it came down to the midpoint of its 12-month average, and it couldn't sustain its open. So once this month opened up, it really had all the selling pressure, and it's still selling down. So next move that I think it was come down to is this 205.27, probably tomorrow. If the market is still going to be bearish, and possibly come back down to two standard deviations of the range. So let's go look at XLU. Is doing pretty good. That's the utilities, and they've been doing pretty good for a while now. And you can see how the utilities so right now we're at our previous high, so that'll be our previous month's high and our previous low, previous month's low. So it really just range trading right now within our previous month's high and low. It did make another low last week, from the previous month's low, but right now it's just trading within this range. It may or may not be able to reclaim this open, but I see all these lower wicks down here, so possibly return back to the 74.67, or possibly pushing back above 80, but it needs to get back above its open at 79. So that's utilities. So XLV is the healthcare. Healthcare has been doing good, well. So we're looking at it from a long time. So right now it's just range trading right now. Looks like it has support in this area, and it may have some resistance in this area, just because it was possibly range trading. It came back into this range and reclaimed this low right here, found support, and is pushing, trying to get back above that range right there, or back above this resistance level right here. Last week did close above, but this week you see it's coming back in, and it's going to be testing its 12-month average right here at 147, possibly tomorrow, and it's trying to get back above this midpoint and reclaim this previous month's high as well at a 149 to continue on its way up. So that's healthcare. So we'll go down to XLP, consumer staples, or just, just yeah, consumer staples. And you can see where it's pushing from this point right here. It actually went back, breached below that this previous all-time high, where it made this new all-time high, and possibly about to make another all-time high. But one of the things that you're seeing with my signals indicator, where you see these purple triangles, it's showing you where it has a high but a low, high but low. So it has a lot of selling pressure in this area from this previous high back here. What is that? 83.19. Even though I have an 83.27, it's still representing resistance. And you have your previous month's close right here and your previous month's high. Even though it made a new high right here, it still has a lot of selling pressure, and it could possibly come back down to its fib level of 81, 82, or possibly come back down to its range average of $81.01 for the last 12 months. So that's XLP, and we'll go to XLY, and these two trade together, Discretionary versus consumer staples. Staples are more so defensive, and consumer discretionary offense. Excuse me. I believe I drew out a range for this one as well, coming from this previous all-time high, and it wasn't able to sustain it. So right now, I marked that out right there. It's actually trading back in this range. It could possibly come back down to 192 because right now it's trading below its 12-month average at 199.91, and it's crossing below one standard deviation from the range low average. So it's been selling ever since then. So if you compare that back to XLP, which is constantly pushing up, but it's kind of sort of finding resistance. And one of the other things I wanted to show you was this indicator seven. It's not complete, but seven key market ratios. So when it's complete, I'm gonna have to go off of this weekly chart. It kind of gives you an idea of what's going on in the market, and I have these two actually trading against each other when it comes to offense and defense, and it's saying it's favoring defense right now, which is XLP. And if I were to come down here, and like I said, it's not complete, I would have to unselect all these different. So now I've unselected all those different things. This white line right here represents the ratio between offense and defense, and this blue line represents the 50-day move average of this ratio, and this pink line represents the 200-day move average of the ratio. Excuse me. And you can see right now, cross below is 50 days, cross below is 200 day for this ratio as well. And like I said before, the ratio is favoring defense, and that's why we're looking at consumer staples pushing up, while uh, consumer discretionary pushing down. And this ratio gives you an idea of what's going on between the two. So it's not a complete. I'm not done working on the indicator, but it gives you an idea of when to go offensive and when to go defensive. Look at those different sectors. But this is one of the indicators that you can be on the lookout for in the future once I'm done fixing everything. I think the dollar's outpacing the S&P 500. As the S&P 500 goes down, the dollar goes up, and that's why it's showing you that ratio. So growth versus value is favoring value. Small caps versus large caps is still it's favoring large caps, and stock versus gold, stock versus bonds, I mean S&P 500 versus the VIX. So those will be the different ratios that are available in this indicator. It's not done yet, but when it is done, just be on the lookout for it. So I'm gonna take it off and go back to some of the other sectors. So we're gonna go to XLRE. So this will be real estate sector. It was pushing up. It had a rough day today, or had a rough last week. So let's go back to the weekly point of view. But it's pushing back up. So this last week and then this current week, right now, is possibly coming back down to the range low average of $41.80. Possibly see a bounce there, or possibly see a range bounce, because I think that bounce actually uh, came from one of these all-time highs. But that's what XLRE is showing you. But be careful, because XLRE or the real estate are sensitive to the interest rates. XLE, it should be up. Energy, it's really just trading within that range. So even though you have some outside ones, but it's still trading within that range. It can't maintain that high, and that's why you have this high right here. Then you have a lower high, and you could possibly have a lower high here as well. But you actually have a lower low right here as well. So we don't know what's going to happen, but you can see where it's actually trading right now. It tested that previous low last week, previous month's low last week, pushed all the way down here, pushed back above. Right now, it's hanging out in this area. Hopefully, it pushed back above and goes back above its open, or it could possibly retest this Fibonacci level right here. So that's energy, XLB, materials. Right now, I would have expected it to trade within this range, but it's actually pushed out of this range significantly here and pushed back into the range, and now it's back out of the range. So it's testing this range low average here. Hopefully, it can get back above 87.63 and continue on its way up. So those are materials, XLI, industrials. You can see what it's doing right now. It's below its range average right now. So it may find support here. And I look at resistance right there, possibly anyway. But another support area being down here, but actually crossed down below. So has another support right there where it was just range trading for those weeks. And that's one of the reasons why I like to look at the weekly charts. It gives you a better definement of support and resistance, in my opinion, especially if you're going long term. So that's XLI. We already looked at XLK. XLL made an all-time high last week, and now it has a gap here on the daily. That's why those pink lines are showing right there. These are some old lines I had drawn out. And you can see right now it went down to 2 standard deviations. It's probably going to come down here and close this gap, or possibly retest this 12-month average down here at 46.31. This is NVIDIA, and you can see right now it's falling through all these different things. I have some Fibonacci levels from, I think this is where a crowd strike happened, August the 5th. I think this is Deep Seek right here. And this is, I want to say this is Trump tariffs. This is the Trump tariffs that sent everything kind of sort of pushing down. So right now it's possibly going to be testing this Fibonacci level 214, but $104.05 tomorrow. At least in my opinion, may not. Could push back above and try and retest this range average low right here at 111.51. And push back above, but I saw this as support right here this past week as support. It actually did bounce on that and push up, but it couldn't sustain it. So it's pushing down below. And if I were to extend this out, you can see some of the other possible support resistance levels for NVIDIA as well. So we'll go to Apple. I think all I got are old lines on Apple. I don't have any lines on Apple. So possibly within this range right here. I could push that range down a little lower, but this is what Apple is right now. So I kind of sort of see it possibly coming back down, retesting this 220 right here. But right now it's testing its previous month's low of 225.70 to possibly come back down here. Let me make sure one other thing. Yeah, I got on. Yeah, BSP modified. So that's Apple. Dead in video, so MST or Microsoft. These are just some of the bigger components of the S&P 500. So we're looking at Microsoft, and it's retesting this previous all-time high right here, where it was range trading, and it's created to me somewhat like a M. pattern. And right now, it did find support this today. This is the current week at 377. Right now, it's trading at 381. Um, so it came down to 377.15 like I thought it would, and it's pushing, or at least it's attempting to hold that area, and it's holding our range average of 380.36 as well. And this year, 50% retracement as well from this low back here, 23 to this current high or all-time high, 468. That's how I draw my fields right there. And then let's go back into the S&P 500, and we're gonna go to the analyze. And I went through those, and we can go to Meta, META. Just looking at a couple of stocks. And Meta, all those lines are old that I had drawn out. So I would look for possible if it did crash below that, and somewhere over here. So those would be my levels for Apple. Right now, it crossed below our average range low, and it's below our one standard deviation, and it looks like it could be possibly pushing down below another standard deviation, two standard deviations, but hopefully not. So what other one? I think that was it that I wanted to look at. Possibly GL, Google, and these are old levels I have for Google as well, where I retested those. I'm hoping it don't come back down here, that it finds support somewhere within these levels right here. But if not, I would look for Google to retest its range average here and possibly retest our range one standard deviation. And this has been our 12-month low 147 and our 12-month high of average of 207.05. Midpoint was 177 and couldn't sustain it. So those are the levels, and some of the other features of the indicator, the premium version of the indicator is, like I said, the Fibonacci clouds. You can cut those on and off. Move the bubbles. That's on the free one as well, and just all those different levels and everything. If you haven't already, please like and subscribe. I appreciate you guys taking the time out to listen to what I had to say. I wish you all the best. Stay safe out there, and God bless. And if you want to get this indicator, just look in the link in the description.